Welcome to Tradespoon. Vlad Karpel, I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, see where there are opportunities in the market, and how to deal with uncertainty in the market. If you have any questions about your Tradespoon subscription, please ask that as well. Our disclosures are important. Please read them. If you're new to trading stock or options, I'm going to go to specific trade ideas. So please take a look at disclosures. If this is new, I would encourage you to visit the link on your screen, optionsclearing.com, so you can understand the risk and suitability before trading stock and options. Also, I'm not a financial advisor. I'm not registered with SEC. I'm showing you, or FINRA. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. All right, trading psychology is important, right? We talked about trading plan and trading journal and importance of having that. But before we jump into trading psychology, let's talk about current market conditions. So spiders continue to deteriorate. We do have end of the quarter rebalancing. We have tariffs, uncertainty about tariffs, end of quarter rebalancing. And then next week we have a decision about the magnitude and scope of tariffs and duration of tariffs, and also unemployment data. So as of right now, we can see that it looks like wave B is over, right? We're talking about wave A and wave B. And right now we're trading in wave C, right? And then the question is, what is the magnitude? Wave B was actually relatively small. It didn't even got close to 50% retracement, but now we're trading in wave C. So then the question is, where does the wave C stop? Does it stop at the current level, 5,600? Does it revisit the lows, right? 5,500, that's the next level. Or do we take out the lows and continue to go lower? So you have three cases, right? One is, so this is wave C, pretty common pattern in pullbacks, right? ABC, sometimes you have ABCDE, right? But most common is ABC. Another question, where does the wave C stop, right? Before rebound, right? Before rebound, do we go, does it rebound here, or somewhere in here? So those are the three cases scenario. So let's go over them. For now, let's look at some of the information. So one thing to keep an eye is going back to game theory, right? It doesn't matter what Vlad thinks, what matters what other people think. So looking at the positioning data in futures, indexes, and equity is very important. So now I'm looking at the gamma exposure in the SPX, in the index itself. So this is probably one of the most liquid products where a lot of people trading, including institutions, trading buying puts and calls. And even if you don't trade options, right? Even if you don't trade options, it is a very useful information in terms of positioning, right? Especially as the volume on exchanges continue to grow exponentially. So we've seen very large positioning at 5,700. That's the level we've been fighting going into today. And now we basically took out this strike, and the next large position is at 5,600. And that's where we actually basically testing 5,600. Right. In live trading room, I was talking about 5,700. I said if we don't hold this value and trade lower, we'll be at 5,600, and we actually got there a lot faster than I thought. So let's look at the data. Let's look at beyond 50 strikes. So I'm looking at let's look at just April expiration now and March expiration. That's where majority of the contracts are, and maybe next week, because people hedge in next week as well. And let's look beyond 20 strikes. Okay. So you can kind of clearly see where the largest gamma is right now, right? So you have 5600. That's basically where we are right now. 5610, 5605. So we're right at the 5600. The next one is all-time, not all-time, recent lows, right? The 5500 was the recent lows where there's a lot of positioning. And then basically beyond that, there's not much positioning. So let's actually look at that. So if I zoom out, let's go through all strikes. $5,600, $5,500, right? So let's see. Okay, so we have a very large position at 5,500, and then the next level that is similar to 5,500 would be 5,200, and then you can see this huge position at 5,000 level, right? So a lot of people are already buying 5,000 puts with anticipation of basically 10% pullback. And that's where majority of the gamma is. So if you look at the total gamma, for about $33 billion. $33 billion. Most of it now resides in April. So that kind of gives you idea of where the market can be, right? I mean, you have large position. A lot of people are trading, 6,000 level, right? Basically retesting recent all-time highs, right? Or at least selling calls. But there are a lot of people are hedging the 5,000 level, right? Hedging or buying puts with anticipation of 10% pullback. Looks like 4,000. A lot of people are trading 4,000 level as well. Okay. So those are the key levels for the market to consider. Also, we're looking, if you look at the retracements, right, from the 22 from the previous recession, the lows, right, October 22 lows, to the recent highs, right? We are right. Oh, sorry, not that's. Well, this we still have. So you can basically see that 4,800 would be 50% retracement, and 38% retracement would be 5,200. Right. This is the August lows of 24. So that's one retracement to look for, and the other positioning is from recent highs to the breakout from the previous bull cycle prior to 2022 recession. And we are exactly at we are exactly at 50% retracement. Right? The recent lows, 5,500. So, the, however you look at it, the lows from March is a very important level, because anything below 5,500, if we do take out 5,600 and 5,500, the next level is 5,200. Right, 5,200 would be that 38% retracement, and then 5,000. There's a large position at 5,000. So 5,000, 4,800 would be the next level. All right. So those are the different scenarios to consider. Right, 50% retracement. One scenario, we're bouncing back to 6,000. We see a lot of people are trading 6,000 level. The next scenario, we're going to take out 50. So that's scenario number one. Right. Scenario number two, we're trading in this range between I think this level is important, right? This is about 5,800, right, or 5,900. So let's call it 5,900 on SPX. So we're trading between 5,900 and the recent lows, right? That's scenario number two, kind of in the 300-point range, right? We're not taking out the lows, and we are trading in the range going into the next earnings season, going into the tariff decision. And scenario three, we're that 50% retracement that we talked about from the recent, the end of the bull market in 21 to the recent peak of the bull market. We're giving up more than 50% retracement. So that would be somewhere around either 5,200 level or 4,800, right? So this is the next level of support, right? So scenario number 3. So those are the possible 3 scenarios, right? A lot of it will depend. We do have a quarterly expiration, so a lot of the volatility today could be attributed to that. That's why the market is down. End of the quarter, a lot of it, going into the Fed decision. Not Fed decision, but new administration decision on the tariffs. And also we have the unemployment data next week. So those are the 3 scenarios. Scenario number 1, we're heading back to at least 50-day moving average or recent highs around 5,900 to 6,000. Scenario number 2, no, we're just going to trade in this range somewhere below 5,900 and recent lows, 55,000. Scenario number 3, we're taking out 55,000, 5,500 and continue to trade lower. Right, so those are the 2 scenarios. 3 scenarios. Joseph, scenario number 2. Thank you. L, Andre, Denis, Joseph, Michael, Steve, Andre 2. Anyone else? Bob, John. All right, so most people said 2. I'm also going to go with 2. Obviously we're very, not that 1% away from the recent lows. So wave B is wave C. We started a wave C, right? So if I erase this, but because of we've been consolidating here for a few weeks, right? Since March, we're at the same level as March 10th, right? So because we consolidate here, I think this is a kind of a classical bottoming building process where more often than not, the lows will hold. Not to the point, right? It could be, we do see position, so I think 5,500, I would say core scenario that the 5,500 will hold. We could overshoot to 5,400, right? Yeah. So I understand that we could still drop, but I think scenario 2, this is A, we trade in B, now we have wave C, and core scenario is that we do something like this, right? After the tariff decision. Right, so that's my core scenario. Obviously, best case scenario, we revisit the highs, which I don't think there's enough damage done to the long-term trend, where the long-term trend is broken. And if you look at the stock forecast toolbox, going into the March, right? If you look at the stock forecast toolbox and you zoom out to 6 months prediction, you can see that even, and this data gets updated on the first of each month, going into the momentum has been deteriorating behind the bulls, only 2% vector or momentum behind the bulls. Now that we dipped, basically 36% or 5% below, most likely when the model runs again on the 1st, right, in April, this vector is going to become negative. So the long-term trend is negative. That's why I think, from my perspective, best case, at least for now, is off the table, right? This is kind of a V-shaped recovery. That more likely than not, we bounce back. Right, we bounce back maybe to 50-day moving average, and then another retest of the lows, right? And only then we can get to highs, right? So that's my core scenario. Would be the best case, that's kind of a V-shaped recovery, which may or may not happen. And obviously, if the tariff rhetoric gets worse, right? If the tariff rhetoric gets worse than it is now, we could, revisit the 5,000 level, which is what a lot of people are thinking. Right? A lot of people are already buying 5,000 strike with the idea that it can drop to those levels. Okay. Will sell and may have a greater effect this year. Sell and may go away. That's seasonality is definitely something to think about it. But more often than not, when you have these kind of I don't know what it's called, exogenous shocks, right, or uncertainty about the tariffs, seasonality does not make, you can't trade based on seasonality alone. So usually, yes, usually actually end of March and beginning of April, you do very, very strong time of the year, right? Especially April and May. This is one of the reasons I'm also bullish. We're oversold 10%. We have a large position at 5,500 strike on SPX, and we're approaching the next earnings season. And I don't think that Trump administration will increase the rhetoric, right? But this live trading room, which we had not that long ago, I basically said the same thing in 2018, right? Which seems like not that long time ago, but it's been what? So I did say the same thing in 2018, but then Powell came out, right? And that's what most people said. It's not like I'm the only one who said that. Right, but the same idea was in 2018, also during first term of Trump administration. Originally, he was concentrating on the stimulating the economy. Now it's kind of in reverse. He's working on tariffs first. But in September, market dropped exactly 10% what it was now, and it was consolidating for 5 or 6 weeks, going into Fed decision, and then Fed Powell came out and say we're gonna respond to increase in tariffs, right, by raising the rates. This time he didn't say that. We just had a Fed decision, so I don't think they're gonna raise rates. Right? I think that's off the table, and I think Powell learned back from 2018 not to do that. But Trump, it's a wild card, right? He could, if he can find an agreement with Mexico and Canada, and if Canada actually retaliates, and then new Trump administration retaliates in return, and things get worse before they get better, then you could have another 10% pullback. But I don't think that's the core scenario. I think this is one of those black swan events that may or may not happen, right? So but another approach to this could be, trade what you see, not what you think. It doesn't matter what I think, but if I look at the gamma exposure and this is the 55 strike, right? If I do 50 strikes, right? I know that the biggest position is at 5,500 right now, right? So if the 5,500 doesn't hold, then then I can get more bearish. But as long as we are above 5,500, I would be bullish, right? And maybe if you're aggressive short-term trader, this is when you buy, right? If we drop below 5,500, that would be net negative, right? So market is oversold and should bounce off of either 5,600 level or 5,500 level. If we drop below 5,500, that's when the worst case scenario becomes a core scenario, right? So, and until then, you're just gonna wait, right, and wait for the data to arrive and make the decision. Any questions? Al, Andre, Denis, Ed, John, Michael, Steve, Joseph. All right. How do we help at Tradespoon? So obviously we have different tools. I mean, my favorite tool is Stock Forecast Toolbox because it gives me long-term trends and short-term trends, right? Short-term trends, I'm bullish. Long-term trends, I'm bearish. That's a very common question. How can you be bullish and bearish at the same time? Well, it just depends how much time period you uh, analyze them. So 6 months, you can see momentum is deteriorating, but if you look at the 10-day, momentum is still behind the bulls. Obviously, after today, probably will change to be more neutral, but still, at least going into today, model sees a bullish momentum behind the bulls. So that's Stock Forecast Toolbox. You can also look at the different sectors under Company Screener. You can see which sectors have been stronger. Semiconductors, financial services. This is going into March. Obviously, this data will change dramatically after April 1st. Right, and you can enter your symbols and look at the predicted low, high, and the trend analysis. So that's Stock Forecast Toolbox. I kind of briefly went over seasonal chart. What we trade in live trading room. So we have live trading room. Keith and I manage live trading room every day, right? My background is more technology. Keith's background is more market making in options. So what we trade are the signals generated by different models. So we have active trader, weekly trader, and monthly trader. Active trader model is geared towards somebody who is short-term aggressive trader. So today we have Altria, right? Altria, Honeywell. So let's look and Verizon that the model predicted going into today. If you look at some of these stocks, the idea that the stocks will outperform the market, right? Market is down 1.5%, right? Or how much is market down? 1.5%, right? And Verizon is actually flat, right? And Altria. So you can see people are hiding in high-paying dividend stocks. So Altria is flat, Verizon is flat, outperformed in the market. And if you want to diversify and hedge some of your positions into safety asset classes that give you dividend and kind of considered to be safe haven, then Verizon and Altria, right? And this comes from active trader. Uh, let's see, Honeywell actually did not. It's industrial, so it did not. It wasn't able to. But still better than spiders, right? Honeywell is down 80 basis points, so definitely better than spiders. In line with other value stocks. So that's active trader. The model basically suggests you look at the spiders futures, pre-market futures. If the market is down, then you, let's say for Honeywell, the idea is to buy at the predicted entry price. So predicted entry price for today is 211, and we're right near that level, 212. So this is where if you think the market is oversold and the 5600 level and SPX will hold, this is the opportunity to maybe go long with Honeywell, right? And the idea is to split the trade into two. We have entry one, entry two, and on aggressive power trader, we're looking for 1% gain, right? So you buy at 211 if you see that pre-market futures were down like they were today, and if they're not, then you just use yesterday's close, which was 214. So that's active trader. If you want to leverage your portfolio and you're more interested in options, then you can buy either weekly options or monthly options. So same trade you can do either buy stock or you can buy an option. Right, March 28 contract that expires March 28, 207.5. Exit and entry prices are the same, right? So instead of buying at 211, you buy 207.5 call for $3.75. So the idea is to buy in the money options, but still look for 1% move in underlying stock. Which is around $2, and this is how we calculated $5.90. So 1% target gain, 1% stop loss on the underlying stock. Obviously, if you're trading options, then you're looking for much higher returns. If you're trading stock, you're using 1%. Any questions on active trader, stock options? So this is one model. Short-term, aggressive trading. Again, the idea is to have 4 positions at a time with maximum loss of 2.5% of account value per position. If you don't like to make decisions every day or every hour and you're looking for more of a swing trading, longer term position, weekly trader. Weekly trader, similar model, but it analyzes larger data set and makes prediction for the next couple of weeks, maybe even couple of months or months, right? Maybe you want to hold this for 1 or 2 weeks, maybe you want to hold it for a month or two. So JP Morgan, right? On weekly trader, JP Morgan. Same idea. You either suggested entry was 241. The model runs on Monday. So Monday was the 24th, right? So if you bought it on Monday, the 24th, the stock went from 245 to 255, right? So 4% move. Now it retraced back. I mean, same idea. A lot of people ask, well, is this signal still valid? I mean, it's a weekly trader. The signal is still valid. So same idea. If you think that SPX, that 5600 level will hold on SPX, is it holding or is it not? Yeah, so for now we're holding the 56. So if you think the market is oversold and 5600, pretty large position, not that far away from all-time lows, then that will be the trade, right? Then you can go in and maybe buy JP Morgan. Same idea, either you can buy stock at the current level, or if you want to leverage, you can buy option, and you can go, nope, option, one more time. At this point, I mean, obviously I wouldn't by March 28th, but you can either buy next week option, or if you're more comfortable trading monthly expiration, I would consider at this point, I would consider maybe May, right? Maybe May, in case the pullback, accelerates. So that would be the weekly trader. In this instance, we're looking for 2.5% move. 2.5 move on JP Morgan that trades at 244 is about what, $6-7. So that's why you see 2%, so $5. So buying at 665, selling at 1145, but again, using underlying stock price. And the idea is to split the entry to two, right? You can buy one at the 235 plus 6 is 241 level, right? And you can buy another one if it drops to 239. But that would be how you would use weekly traders. Same idea, stock and options trades, but you're holding the position longer, right? You're thinking about weeks, not days. And then your target gain and stop loss are also wider. In this example, 2%. And same idea goes with monthly trader. So active trader, weekly, monthly trader, these are the signals that the model generates. Active trader, the signals are generated every day. Weekly trader and monthly trader signals are generated every Sunday. And then we provide you with suggested entry or exit prices, but you would have to trade them. You would have to trade those signals. We assume you have a trading plan and you know how to manage your position. If you don't, then you can join us in Elite Circle, right? Keith and I managing the live trading room. We have first hour of trading session and the last hour of trading session where you can ask questions about the models. You can ask questions. Keith has a lot of background on options positioning, gamma exposure, open interest, some of the more advanced concepts like time skew and volatility skew. So that would be Elite Circle. And you can actually see all of our trades, right? So here I'm doing Lululemon, calendar spreads. Here I entered Amazon, right? I added to my Amazon position, closed Broadcom. So it's a combination of both option and stock trades, right? And you can participate in live trading room. You can watch the recordings if you don't have time. You can enter your phone number or Discord ID, and we will send you the SMS messages on your Discord or on your phone. And that's Elite Circle. Any questions? Chuck, welcome back. Give me 1 second. Yeah. So any questions so far? Any questions on the Elite service? So this is stock and option trades. If you're looking only for stock trading, we do have a robo-investor portfolio, which you can follow. This is only stock trades. If you're looking for just option spreads, which is a popular signals, then premium portfolio or spread portfolio, right? These are ours, just spread signals. What else? We do have a YouTube channel. So every Monday and Wednesday, we have a live broadcast on YouTube. I hope you guys can join me on Wednesday on the YouTube. And we have a lot of free content. So if you want to learn about stock or option trading, we have technical analysis, a lot of content on technical analysis, advanced technical analysis, options basic, trade management, portfolio management, advanced options. If you're looking for one-on-one coaching, if you can commit time and financially commit, this does cost additional price. We do have one-on-one coaching. So you can fill out an application, and one of our product specialists will talk to you and set up kind of a custom one-on-one coaching program as well. And you just need to fill out this application. So something also to consider. What else? So in terms of trading psychology, right, very important, the economy of control, right? Doesn't matter what you think. What matters is what you see, right? What's within your control, right? What's within, and not constraining things without your control, right? You don't really know whether 5600 will or will not hold, right? So you trade what you see and concentrate in things that are within your control. What's within your control is cash, right? How much cash do you have in your portfolio? How many positions you have, and the position size, right? The most important is to get these numbers correct, and that depends on your personality, depends on your experience, depends on how much money you're managing. There's no kind of a clear cut answer, but I know just from the research and from um, talking to a lot of trading psychologists, you want to keep your portfolio drawdown, especially when you're new, somewhere around 10%, right? If you're an experienced trader, you want it to be under 20%. But if your portfolio is down more than, let's say, 20%, this is when you start trading based on emotions, right? So you want to make sure you avoid that. So how do you? That's within your control, right? You can look at how many positions you have. You can look at how much maximum exposure, what your stop levels on those positions are, and that can help you deal with the current market volatility. By doing this positive negative visualization, which we went through, right? I think that the market, the lows will hold, right? Based on my experience, based on some of the data I see, based on the research out there. But I do realize that sometimes, there's some new information that you're not expecting, and then the market could sell off further. So, kind of going through these positive and negative rehearsal exercises are very important. Um, we talked about positioning, game theory. I mean, it's all about compounding investment. Treat your trading as business, right? Set your weekly goals, set your monthly goals, set your annual goals, right? Initially, I would just try to beat an S&P, right? If S&P historical returns somewhere between 7-10%, try to have 7 to 10% returns in your portfolio. If you can do that, then you can every quarter, every month, you can set the bars a little bit higher, right? It's very important to have kind of this realistic expectation versus the initial expectations on the return, right? A lot of people want, I want 200% return, 600% return in my portfolio. I mean, you can achieve that maybe short term, but over a long period of time, it's not that easy to achieve. So you start, instead of setting expectations very high, you set expectations lower and you try to find, narrow that gap. And compounding investment is a very powerful concept. In active trade or weekly trade, I'm looking for 1% move, 2% move in underlying stock, but that accumulates, right? If you can consistently make even 1 or 2% every week, then over 52-week period, it can accumulate into nice compounded returns. All right, any other questions? All right, Renata, Kevin, Joseph, Ed, more people are joining. Chuck, any questions so far? Some of the homework, again, I like to always finish these webinars. One is the understanding prospect theory, right? Because Daniel Kahneman, he actually got Nobel Prize for his work in behavioral economics. But the idea is that our relationship with losses and gains is asymmetrical with our relationship with losses, right? Gains versus losses. So $500 gain feels a lot different than $500 loss. Something to keep in mind. That's why there's always a saying that you know, keep your losses short and let the winners run. But innately we're doing the opposite, right? We're cutting our gains short and we let our losses go too far. So the first step, just to recognizing that this concept exists and there is merit to this concept. So I would encourage you to read up on prospect theory. One of my favorite books is Thinking Fast, Thinking Slow also by Daniel Kahneman, right? A lot of his theories are actually encapsulated in this book. That we think in two different modes, right? We have this system one, system two, and in system one we make very quick decisions, right? When we based on fear and greed or based on intuition. This is what the system one. And often in trading we do trade based on our intuition or based on our feelings or based on our recency bias or self-serving bias. So that's the fast mode. The slow mode is more methodical, where you have a trading plan, you get a coaching, you have trading journal, you do the research, and you have checklists. And sometimes it's great, sometimes you need to operate in both modes. But again, step one is to recognize that there's two different modes where we make our trading decision, right? Or any other decisions for that matter. And this is another great book to read. And then finally, thinking in small bets, right? The idea of compounding investment, thinking in, by Annie Zuk. She actually was a friend and colleague of Daniel Kahneman, also has PhD in psychology. She's one of the best poker players. So very, very good book to kind of help you trade. Thoughts on silver and gold? As long as the uncertainty persists, which I think is going to persist, gold and silver continues to trade higher, making new all-time highs. Right? Gold is at all-time highs, right? Kind of at this vertical move up. Much higher than it was in financial crisis. Silver, I think it's more of an industrial material. It's not as high as we had, right after the financial crisis, but it's getting up there, right? There is a little overhead resistance from October of 24, or, October of 2012. So we're kind of in multi-decade highs. But if this level is taken out, then I think gold, silver can continue going higher. But for now, it's been underperforming gold. Any other questions? All right, guys. That's all I have for today. Thank you very much. Keith will be back at 2 p.m. Central, and then I'll be back on Monday. Consider joining us for Elite Circle. We do give 30-day money-back guarantee, and then you can participate in live trading room, watch the recordings, and actually see all of our trades. Thank you very much, and have a great day. Thank you, Joseph.